2023 year-over-year home numbers will be negative. Jeremy Knight, the Knight Group, your favorite Austin realtor. Now look, we are starting to see a lot of articles come out about the 2023 housing market and the forecast Redfin just put out there. So we're going to talk about that a little bit. But I have my own predictions of what's going to happen in the Austin area. And guess what? It's not pretty as far as year-over-year numbers go. Okay, drop a comment below. I do want to hear from you in the comment section. What do you think is going to happen over the next year? Is it a good time to buy? Is it a good time to sell? There's some information I'm going to tell you about listings and selling right now as well. I want to hear from you in the comments. Here we go. All right, so this article just came out from Redfin. I'm pulling it up from Forbes. The steep collapse in home sales spurred by rising interest rates will continue into next year and lead the housing market's first yearly price decline in a decade, real estate brokerage Redfin says in the report. And they're saying that predictions are calling for a significant decline as high as 20%. And I'm actually agreeing with some of the things they're saying in here quite largely. I mean, let me know if you're agreeing or disagreeing with what they're saying in here. Definitely want to hear from you. In Tuesday's report, Redfin economist Taylor Moore predicted existing home sales will fall 16% on an annual basis next year to 4.3 million, their lowest levels since aftermath of the Great Recession in 2011, as high mortgage rates, persistent inflation, and potential recession continue to deter would-be buyers. Now, this is something I'm hearing a lot from buyers right now in the market as well. Like, hey, I'm waiting for prices to come down even further. And you're about to see, maybe even starting in November of 2022 in the Austin area, we're going to start seeing year-over-year decrease in prices. Now, something I need to stop here and talk about, because this is kind of important as well. When these stats come out, a lot of times these stats is kind of cherry-picked information. Hear me out here. So when they put year-over-year appreciation, you're looking over 1 year's time span. Well, you also have to look at the month over month. You also have to look at some of the things like how many homes are on and off the market. And Redfin actually has this article out, which is pretty decent information. Home delistings hit record high in November. Now, let's talk about this. We are starting to see a lot of sellers pull their homes off the market. And one thing we'll talk about is inventory here in a second. But in Austin, we are number 2 behind Sacramento of those boom towns that are seeing homes delisting. So it's people that put their homes in the market, they sat, and now they're pulling them off the market. I have teams of people actually calling expired and withdrawn listings right now, because guess what? All of that inventory that's coming off the market right now is actually going to be coming back on the market next year, potentially. Keep in mind, I'm the one that's been telling you that the inventory's been coming down over the last couple months. In fact, Redfin has a chart showing that, and that's because we got to a high of about, in Austin area, about 11,500 units on the market. Now we're about to 10,400. December is just one of those times of year where we start to see more and more people pull their homes off the market just because of the holidays, and then they relist. So Austin's down 1.5 compared to Sacramento 3.6. So we are seeing a lot of people pull their homes off the market, and there is less inventory. So if you're looking to buy right now, I'm not telling you to buy, but if you are looking to buy right now, it's a good time to write a really low offer. In fact, I saw some recent news that most homes are being sold 3% below list price in the Austin area. And so I've looked at some of those numbers. I think it's closer to 5%, but I want to get into what's actually happening in the market as well. So let's go back to the Forbes article. Though he expects a slow recovery in the second half of the year, Moore forecasts a decline in the home sales will help push median price from existing homes down from $379 down to $364, about 4%, making the first annual drop since 2012. So let's bring this back to the Austin numbers, because I do think the Austin numbers are going to be actually year-over-year negative. If we look at them right now, we are actually down, like I said earlier, about 17%. So we got to a high of 667 in the market, and we're down to 555. And if we look at this, the only reason why we're up 3% is last year at this time, our median price was 536. And in fact, it went up in November to 540. Now, when I'm looking at the numbers, I'm usually about 15 grand to $20,000 higher than what the A-board numbers are. Well, the A-board stats are probably going to come out in the next 2 days, which means that they're probably going to be about 540, which means year over year, potentially we could see our first negative numbers in the Austin area for Austin specific. Now, it might be a little bit higher, it might be lower, but I'm saying, but that at the end of the year, December numbers will absolutely be the first month that we see year-over-year negative numbers, unless the Austin numbers come back up over 555. Because if you look at this chart, we ended the year at 555. So this would be the first in almost really a decade that we're seeing year-over-year negative numbers. Now we're going to roll into next year, and we're going to start seeing these negative numbers because January was 550. If you look at February was 565. And then we saw a huge jump from January all the way to 624. In fact, if we didn't see this huge bump, which is typically what we see in the season, we'd actually probably have ended the year maybe positive. And if a lot of this inventory that we're seeing now had shifted to January, because if you remember, we were talking about how low inventory was in the Austin area, then these numbers probably wouldn't have risen so quickly. So we probably would have seen a little bit more of a flat line. In fact, I have another really good graph right here that actually shows you the last 4 years of sales. And if you look at this line, I mean, we're kind of on trend of where we would have been had we not had this crazy market. Maybe we'd have been a little bit lower, but I know, what do you think in the comments there? Let's get back to the Forbes article because I think there's some more good information here. Prices will fall more if not for the lack of homes for sale. He explains, noting total inventory should remain near historic lows, thereby preventing sales from plummeting as the gloomy outlook deters more potential sellers from listing their homes. So this is a good point. This is something we've talked about in the live streams. I just said that last year we started the year in Austin about like 1,800 homes. And that was for the whole MSA, or whole MLS. We're going to start the beginning of the year closer to 10,000 homes, maybe a little bit lower, but probably around 10,000 homes. That's a good almost 4x from where we were at the beginning of last year. So this inventory is going to continue. And so you may see more price drops in the Austin area next year because of that, because we do start with more inventory. And, you know, we'll talk about rates in a minute, but a lot of people are saying rates towards the end of the year are going to be about 5.3 or 5.5%. Which means that if we don't see a huge price increase in the the spring season, it might be worth it for you potentially to wait till later next year. Now, I've always said in all my videos that, and if we look at the chart that I have right here, you do see prices really come up in the spring and then drop back down in around the, July, August, September timeframe. So we may see prices come up a little bit, but year over year, they're going to be negative. And in fact, between really February and August, we're going to see negative numbers. What I think we'll end up seeing though is year over year by December, we'll see positive numbers. So I think that's something that people really need to understand is you're going to see year over year negative next year. And you're going to see the media say a lot of things that, oh, this is the first thing that the home prices have come down. But we'll end the year still year over year. Now, you're going to say, Jeremy, that's kind of cherry picked data. And I actually agree with you. It is kind of cherry picked data because because the stats that come out are year over year. And then I talk about month over month. So I think you need to pay attention to both. But but I think towards the end of the year, we will start seeing a higher month over month raise in prices. And we'll also see a positive year over year, depending on how we end November and December. Now back to the article, it says Comerica chief economist Bill Adams says the economy will likely be more resilient to the housing correction than in the 2000s boom went bust, thanks to mortgage underwriting standards becoming stricter after Great Recession and the most homeowners being in generally better financial shape. Now this is something I hear from a lot of people too, is like, oh, there's going to be a wave of foreclosures. I can't wait for the foreclosures to come. And you have people like Patrick Bet-David saying that they're up 700% when the reality is that was very unique because they finally started allowing foreclosures, but we're still below pre-pandemic numbers when it comes to foreclosures. Even if we saw a lot of foreclosures now at the end of the year, it would still take months for those to hit the market. So literally they would start hitting the market closer to August than they would right now because foreclosures just don't happen overnight. You just can't foreclose on a home and then get it sold. There is a process in place, especially here in Texas. And the director of investment firm Yield Street said markets like Phoenix, Los Angeles, Boise, and Dallas saw a 30 to 40% surge in home prices post-COVID and have a large supply of new homes being built, are more likely to see price plummeting 20% or so throughout many of the markets that will face smaller declines. So I think Austin probably will see 20% at a certain point decline. I think it's very possible, or it's going to continue to be around this 16, 17%. It's very possible we get to 20%. I think what's interesting here that they're talking about is the fact of all the new construction. A lot of the builders partway through this year stopped a lot of their production or slowed down their production. So we may not see as many new builds hit the market, but again, there still is a lot of inventory to pay attention to. So what should we look out for? Prices will start their decline in the first quarter, Mar says. I think Austin will actually personally personally, I think Austin will start maybe just November, in fact, maybe December, followed by a steeper 5% decline in the second and third quarters before recovering sets in the later of the year. And this is pretty much what I've said in this video, is that we'll start to see positive numbers more towards the August, September, October, but not by a whole lot. So, last year we said, my prediction for 2022 was that we would see a 12% probably increase year over year, maybe down to 9%, all the way down to 6. Now that's a wide gap I just gave you. Yeah, I wasn't anticipating having this big 20% year over year increase, and I don't think many people were. But to be at 4% or 3% right now and ending the year negative, which I think we may be ending the year negative. What are your thoughts? Jeremy Knight, the Knight Group. What do you think is going to happen in 2023? We'll see you in the next video. Have a great one.